You were listening to chartingwealth.com for Tuesday, the 15th of May, 2018. The Charting Wealth book, Charting Your Way to Wealth, aptly named, is available for sale now. You can go to our online store. If you get the daily emails, that's the daily market reviews. If you're a subscriber, you'll see the link in there. If not, you can go to chartingwealth.com, the website, and under our daily reviews, there's a link there to go to the store to purchase the book. Those of you who pre-ordered, those were sent out on Friday, and we have plenty of copies available for you. It explains everything that we do here at chartingwealth.com, both of our techniques for charting and entering trades successfully. It also explains all the things we use on the charts, why, our thought process, our reasoning, how to use the daily market, weekly market, and trade worksheets, all the things that we do. And you get to support us. We've been bringing you this for several years now for free, and we're asking you to buy our book to help support all the work that we do for you. It is available. You can also find a link at our Charting Wealth YouTube channel. Let's jump into these charts. What do we see going on? Well, the S&P up just a little bit for the day, 0.02%. The Qs, that's the Nasdaq 100, up 0.17%. TLT 20-year bonds down 0.53%. Gold down 0.42%. Let's jump into stocks. What do we see? Well, inching closer to a crossover going up on the S&P 500 after 2 weeks of up movement going in. Well, I'm sorry. This is just the first day of the latest week of up movement, but we had a prior week ending Friday the 11th of May that was really the first week of nice up movement in 3 weeks. We had 1 week of up movement back ending the 20th, and of course we had had 3 big down weeks. When I say the 20th, I'm sorry, that's 20th of April. We had had 3 big down weeks of movement at the end of March. That was March the 23rd, March the 29th, and then May the 6th. Those were big sort of crows there, big down candles, and then things sort of went sideways and then started moving up over the course of the prior week. And so far, the first day of the latest 5-day candle is a nice hefty up move. Now, it doesn't mean this candle is going to stay this way. This is just the first day of a 5-day candle. Getting closer and closer to crossing over, going up. Derivative oscillator still a little bit negative. Price percent oscillator heading up. As we dig a little deeper, what do we see on that 2-day chart? Well, it crossed over going up all the way back on the 16th. It went up for 2 more days, then down and sideways, and then started really moving up again in earnest back on the 2-day candle ending on Tuesday, the 8th of May. And of course, now we have 3 strong up candles continuing to move up. We look at the 4-hour chart. What do we see going on there? Could be topping a little bit. We saw up movement in the morning and then sort of a pullback in the afternoon. Derivative oscillator has lost energy, and that is the first time the derivative oscillator has lost energy, wow, since it was negative. So again, been gaining energy, sliding sideways over the prior 3 derivative oscillators, and then lost energy in the afternoon. We see the price percent oscillator still going up, not as strongly as it had been. So again, keep your eye on things, see if things are topping out. We'll continue to watch the S&P 500. If we go back to, and again, we don't have a trade because the weekly's going in one direction, 2-day in another, but we might by the end of the week. Have patience, my friends. What do we see going on the Qs? Well, we see that we're into our 3rd week of up movement, getting closer and closer to a crossover going up, very similar to the S&P 500. Just barely negative on the derivative oscillator, price percent oscillator, awfully close. This is the 3rd week of up movement in the Qs. Nasdaq 100 second in the S&P 500. And as we look closer, we see that the 2-day chart, we had a crossover going back on the 4th of May. And of course, we've got 4 nice upward candles moving up. Derivative oscillator gaining energy there. And the price percent oscillator heading up. 4-hour chart, what do we see? It's going, not just going flat, but going down a little bit. Derivative oscillator actually topped off back on the 8th. Down and then sort of sideways, building up a little bit of momentum in the afternoon on Thursday the 10th and the morning of Friday the 11th, and then started losing energy since then on the derivative oscillator. And like we said, price percent oscillator headed down a little bit. So keep your eye on the cues. Maybe we'll have a crossover going up by the end of the week. We could have a pullback. And again, the charts lead us. Remember, we're trend followers. We are not forecasters. Forecasters get hammered. We don't get greedy. We follow the trends. And when there's not a trend, we keep our money close, right? It's better to not lose money than to jump into a trade willy-nilly and get hammered. Recovering that is extremely difficult. I typically judge people on the quality of trader they are as how they limit losses. And of course, you always want to make the most out of gains, but it's the losses that kill you. Now, let's keep moving through. TLT, 20-year bonds, confirmed up move all the way back on these charts on the 29th of March. Went up for the following week and then started going sideways and down and continues to track down even though the derivative oscillator has just flipped over going down. The price percent oscillator is still in a confirmed up move. We've watched over the course of maybe 1, 2, 3, 4, maybe going into the 5th week, and it keeps pulling itself back over, just won't cross over going down. Very interesting on bonds. Don't want to give up that up movement as far as price. We've really seen a sideways slide now going into the 3rd week. We'll continue to watch things. The derivative oscillator flipping over to the negative might be telling us something as far as a switch over moving down. No strong movement. What do we in bonds here for several weeks? What do we see going on the 2-day chart? Well, it crossed over going down back on the 20th of April, down 2 more candles, 4 days, and then sort of sideways since then, is slowly starting to peak up with this latest candle. And we see, however, that we're still in the negative on the derivative oscillator, so it's not crossed over going up yet. Continue to keep our eye on things. When it does cross over going up, if this weekly chart continues in an up move, then you might have the makings of an actual up play in bonds. We'll continue to watch, see what we see. What's going on with the 4-hour chart? Well, it crossed over going up on the price percent oscillator, not the derivative oscillator, back in the afternoon on Thursday the 5th, boomed up in the morning on Friday, pulled back in the afternoon, and then down on Monday. So again, we're just seeing a sideways slide on TLT. All things being equal, the market does tend to go in the direction of the largest chart, which is the weekly chart, which is up. So we'll wait and see if we see a crossover going up on that 2-day chart that might set us up for a trade later in the week. Lastly, we go to gold, down 0.42% for the day on the weekly chart. We had a weekly vertical crossover going down back on the 16th of March. And then for the next several weeks, the market went up in gold. We saw the price percent oscillator oscillating, just basically hovering right around the red signal line. Derivative oscillator stayed in the negative. And then, of course, things really started shooting down for gold on the week ending April the 27th and on into May the 4th, the week ending then. Then in the prior week ending the 11th of May, it was pretty much an up week. And then so far this week, we have a green spinning top, which again means indecision tending up. And we do see a push through the trend line on the weekly chart. But the derivative oscillator is gaining downward momentum. Price percent oscillator heading down at about the same amount, maybe a little bit more than it was in the prior week. We go from the weekly chart to the 2-day. And we see, of course, the 2-day chart moving up over the last 4 days, up on that 2-day chart ending on Thursday the 10th, and then again the 2-day chart ending on Monday the 14th. Derivative oscillator losing downward momentum. The price percent oscillator, however, is headed down. Now, again, we had a lot of downward momentum on that price percent oscillator from 8 days of strong down movement when we had that 2-day crossover going down back on Tuesday the 24th of April, and then things sideways since then, but that momentum continues. and we'll just continue to keep our eye on things on gold, keeping in mind where that 2-day and the 4-hour, the 2-day and the weekly charts are. Now remember, both of those are down. So what do we see going on? Well, we have the potential, since we have a pullback underway on the 4-hour chart, that if we do have a crossover going down in gold, it can get us into a down move on gold. You can go short on gold, particularly with the pullback that happened in the afternoon. That tilted the price percent oscillator over, headed down. Derivative oscillators still in the positive. So keep your eye on gold. It might be our next thing to actually be able to practice trade on. Keep your eye on gold both tomorrow at noon for the morning candle and in the afternoon on the 4-hour chart. See what you see there. Let's just check out, just for fun, what's that 2-hour chart doing? 2-hour chart was pretty accurate over the last move with that up move. It popped up and then continued to move up, never crossed back over. And of course, it moved over going down at 2 p.m. That is in the afternoon on Monday. So again, not saying we're trading on the 2-hour chart, but it is interesting to watch. We always like to keep an eye on our charts and just sort of see what is accurate, what's working. Got a little sloppy there around the end of April, beginning of May. Don't like to see that. If you're going to use another chart, particularly a shorter chart, you want to see nice, clean movement. You don't want to see crisscrossing. That can really goof you. So again, let's just continue to keep our eye on this 4-hour chart, which has been, again, it's trying to get back to working again. It got real sloppy there in March and April, and we saw it getting cleaner at the end of April and, of course, the beginning of May. So hopefully that 4-hour chart will come back to us. God bless, my friends. That is it. If you don't have Charting Your Way to Wealth, you need it. Help support us. Go to the website. Look for the links under the Daily Market Review and buy your copy today. We will send it to you, postage paid. We'll take care of it all. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.